Hello and welcome to Crack CA Exams with us, and I welcome you to Unacademy, India's largest online learning platform. Thank you for being part of it. Okay, so let's crack CA exams is a vertical that is started off by Unacademy to teach the CA foundation and intermediate students. And just one sec, I'll just get some water. Okay, so Let's Crack CA Exams is a CA vertical that is started off by Unacademy, where they take classes or they help you with your subjects for CA Foundation, Intermediate, and the final examination. So I hope you make the most of it. So let's crack CA exams. A little about the educator today, that's me. Hello, I'm Prathik Gupta. I'm a Bachelor of Commerce from Christ College, Bangalore University. I am an associate member of the Institute of Chartered Accountants of India. I am an associate member of the Institute of Company Secretaries of India and also an associate member of the Institute of Cost Accountants of India. Along with this, I am a law graduate from Karnataka State Law University and also a visiting faculty and an educator for CA students both online and offline. Prior to starting my own, and currently I'm a practicing chartered accountant. And prior to being a practice chartered accountant, I worked with SR Barkley Boy and Associates, that is an Indian member firm of Ernst & Young Global in the Audit and Assurance Department. I worked with Ernst & Young India in the Mergers and Acquisitions Department. Post that, I worked with the Manipal Group as the Finance Controller or the Corporate Controller of the Indian and the German entity in India and Germany. Post that, I came back and I started my own firm. Welcome to my session. So the Unacademy also provides a Plus platform, which is a subscription-based platform, and I encourage all of you to become a part of it. So once you subscribe to the Unacademy Plus program, what do you get? You get daily live classes where you get to chat with your educator, engage in discussions, ask your doubts, and answer polls all while the classes are going on. You do not need to have a separate session. You do not need to book an appointment or anything like that. You can do it as and when the classes are going on. That's one of the big advantages of the Plus subscription. Next, you get live classes and quizzes which help you evaluate your preparation with our regular mock tests and quizzes and get detailed analysis on your performance. So this helps you in identifying your strong points, your weak points, areas where you need to spend more time, areas where you can spend little time and compensate that time in areas where you require more time. So this is what the mock tests and quizzes help you, and it also helps you to prepare for an examination more thoroughly. The courses provided by the Plus program are structured. They are structured in the sense that all the courses are in line with your exam syllabus and help you to best prepare for it. And it also ensures to the maximum extent possible that no stone is unturned while you're preparing for the various subjects or topics. So, and lastly and most importantly, you get unlimited access. In one subscription, you get access to all the live and recorded courses to watch from the comfort of any of your devices. You can carry the classes in your device, in your mobile phone, laptop, or wherever you are going. And the best part is you can view it at any time you want. There is no time restriction, there is no expiry. So with whatever time you get while traveling or in between things, you can always go back and view those classes and learn from it. All right. So I encourage all of you to become a part of the Plus subscription on Unacademy, the details of which again will follow now in the next slides. For those of you who have downloaded the Unacademy Learning App and are using it, I thank you very much, and I expect your wholehearted support in the future as well. For my friends who have not yet downloaded the Unacademy app, I would request them to go to the Play Store and download the Unacademy app from there. Use your mobile number and register on it using the OTP you get. It's as simple as that. So what does the Unacademy app do to you? The Unacademy app opens your world to the various courses, resources, and contents that Unacademy has to offer you, and it keeps it on the go. You can view it wherever possible, at whatever time possible. You do not need to have an appointment or a time fixed for that specifically. You can do it at your convenience. All right. So for the ones who've done it already, thank you very much. For the ones who haven't, I request you to please download it and use it. And I look forward to seeing you there. So I'm part of the CA Foundation and Intermediate plan of Unacademy, and the CA Foundation and Intermediate subscription plan is as follows. Unacademy provides you plans for 1 month, 3 months, 6 months, 12 months, and 24 months. The cost of the 1 month package is 3150. The 3 months package costs you the cost of a 1 month package is 3,500. The cost of a 6 month package is 14,000. The cost of a 12 month package is 17,500. And the cost of a 24 months package is 21,000. So while you can make your decision and review the cost of the various packages online, I request you to use the code Prathik, Prathik, to be used when you decide to make the subscription to get a discount of 10% on the subscription price. So the prices you see here are post 10% discount prices. So do not forget to use the code Prathik, Prathik, to get a discount of 10% on the subscription price. I personally would encourage you to go for the 12 months or the 24 months package for two reasons. Firstly, it is cost effective if you see the costs. And secondly, for any major examination, when you prepare for it, you require adequate time to do so. And 12 months and 24 months is adequate time when you prepare for a professional course. So 12 months and 24 months package, as per me, would be the right one for you. But you're still free to make the choice of your package. But whatever package you choose, please do not forget to use the code Prathik, Prathik, to get a discount of 10% on the subscription price. So I look forward to seeing you on the Plus program very soon. Okay, so let's start off with today's topic. Let me get some water. Okay, so what are we talking about? Incorporation of Company and matters incidental thereto. Please remember, today the session that we're going to talk about mainly deals with Companies Act 2013 and company law relating to the intermediate course of the CA course. So the intermediate students of the CA course will benefit more from this session. So I request you all to pay attention and listen to it carefully. And in case you have any doubts at any point of the session, please feel free to ask me and I will be happy to answer all your doubts and queries. Okay, so let's start. Incorporation of companies and matters thereto. Now, before we start off into the slides, let's talk about what do we mean by a company. Now, see, what are the various business forms of organizations present currently in India? We have a proprietorship concern, we have a partnership concern, we have a company form of business, we have a trust, we have an AOP, and we have a body of individuals. We have all these kinds of business organizations. So what does it mean? A person is free in India right now to carry on business either as a proprietor, and a proprietorship concern is a concern which is managed and run by one person only. So that one person manages and runs everything. He runs the show, basically. Okay, and everything right from starting the company to making the sales to doing everything is on him. And there is no partners in that. It's a one person or one man show. That is a proprietorship concern. A proprietorship concern is easy to start. It's cost effective to start. And there are not many detailed compliances that need to be done. All right. But on the flip side, the disadvantages are you do not have expertise of partners. And then the capital gets limited because it's one person. How much of capital can that person have? And other matters as well. And then the expansion or the growth, the scalability for a proprietorship concern normally becomes an issue. Not always the case, but normally it becomes the issue. So keeping that in mind, now let's come to a partnership concern. A partnership concern is a partnership firm is a firm where there are two or more people who come together, who agree to carry on a common business of the firm and share the profits or losses in an agreed ratio. Now, I have taken sessions on the Indian Partnership Act 1932, the Limited Liability Partnership Act 2008, which is there in the archives in the Unacademy app. I request you to go through them to know more whenever you find the time. So there is a session on Indian Partnership Act 1932, and the Limited Liability Partnership Act is also present in the archives of Unacademy. I request you to go through it whenever you find the time. All right. So, and then we have a trust. A trust is normally a trust is an organization or a asset which is managed for the benefit of certain other people called beneficiaries. And normally, very normally, you find hospitals, educational institutions which are registered as trusts. Okay, so these are and then you have association of persons that you have where there are one or more people who come together, and it's not for a business but for a common objective, and then they carry on the activities, not for profit mainly, but it is for the benefit of one another. So whatever money they get, they do not distribute that money as a dividend or a profit to the members, but they use it for the purpose for which the association was built. The example of an association is your apartment association, Board of Cricket Control in India. BCCI is an association of persons. It is a non-profit. Okay, this way. So then we have a company. A company includes a private limited company as a public limited company. Please remember, a company can either be a private limited or a public limited. Now, very often we use these terms interchangeably, right? Like, okay, I am a proprietorship company, or my company is proprietorship, or my company is a partnership company. Please remember, it's not a company. It's a proprietorship concern and it's a partnership firm. That's a big difference. But a company can be only a private limited or a public limited company in India. A private limited company has the words private limited at the end of it, whereas a public limited company has the words public limited company at the public limited or limited company at the end of it. So today what we're going to discuss is a company that is a private limited company or a public company which has to be incorporated under the Companies Act mandatorily. Okay, just one second, just hold, just one second. Okay, so now what we're going to discuss about is we are going to discuss about a private limited and a public limited company and other forms of company in the Companies Act. All right. No, let's start off. Incorporation of Companies. A company is a separate legal entity. A company is a separate legal entity with perpetual succession for lawful purpose. Development of this concept is equally significant in economic terms as invention of steam engine is for the Industrial Revolution. Persons who initiate the promotion of a company are known as promoters, and all the persons who take steps for the registration of a company, example, those associated with the preparation of a prospectus or in drawing up of a memorandum of association of the company and assisting in its registration are regarded as promoters. Now, a company is a separate legal entity. Now, what happens when you start off a private limited or a public limited company? Please remember, it is an entity that is separate or distinct from its members. It gets a separate legal identity with perpetual succession. So the main qualities or characteristics of a company are: one is separate legal identity. That means the minute a company is formed, it is separate and distinct from its members. Okay, and the members and the company are not the same. These are different for tax purposes and legal purposes. The next one is perpetual succession. Perpetual succession simply means the members of the company may come and go, the directors of the company may come and go, or people dealing with the company may come and go, but the company will not die. It will not come to an end unless a legal, lawful winding up or liquidation of the company is done. So obviously, the purpose of the company should be lawful, and next, the purpose of the company should be lawful, and and one more important part is limited liability. Whereas in the case of a proprietorship, the liability of the proprietor is unlimited. Whereas in the case of a partnership, on traditional partnership also, the liability of the partners is unlimited. But to arrest this or to address this feature, the liability of the members of a private limited or a public limited company is limited. It is limited to the extent that of the unpaid amount on the shares held by them, or the amount of guarantee given by them in the Memorandum of Association. Okay, so now this concept is equally important as it is for the invention of steam engine is for the Industrial Revolution. Please remember, the concept of company was very important in the way the country was developed and everything happened, because the company form gives you a lot of benefit in terms of raising money from the public, in terms of expanding your operations, in terms of dealing with expertise and things like that. So it was very important. Now, there are two important documents with the company, that is a Memorandum of Association and an Articles of Association. The Memorandum of Association and Articles we will discuss later in the chapter today. Okay, and who are the promoters? Now there are certain people who are involved, right, who come up with the idea of the company and who are associated with the registration or the bringing up of the company into existence. Those people are called the promoters of the company, who do up all the formalities for incorporation of a company, bringing it into existence, like hiring a consultant, preparation of memorandum, assisting in registration, and also are all regarded as promoters. They are the people who give birth to the company. Okay. Formation of a company. The Companies Act 2013 deals with the basic requirement with respect to the constitution of the company. In the case of a public limited company, with or without liability, any 7 or more persons can form a company for any lawful purpose by subscribing their names to the memorandum and complying with the requirements of this act in respect of registration. In exactly the same way, 2 or more persons can form a private limited company, and 1 person where company to be formed is a 1-person company. So please remember, whether it is a private limited company, a public limited company, or a 1-person company, this company has to be registered under the Companies Act. All right, 2013. Now, earlier to 2013, Companies Act 2013, we had Companies Act 1956, and before that we also had a Companies Act prior to independence. So all the companies that were formed in any of these acts will be governed by the Companies Act 2013, which is the latest Companies Act. Are we clear? Okay. Now, like the screen says, a company, either it may be a private limited company, or it may be a public limited company, or it can be a 1-person company. 1-person company concept was not there in Companies Act 1956. It was started off in Companies Act 2013. So for a private limited company, we require a minimum of 2 members. 2 or more people have to come in. For a public limited company, we need a 7 or more members to come in. And for a 1-person company, we just require 1 member to form the 1-person company. Now, how do we form the companies? What happens? We will see further in the remaining slides. Now, a company may be formed for any lawful purpose by 7 or more persons where the company to be formed is a public company, 2 or more persons where the company to be formed is a private company, 1-person company, 1 person where the company to be formed is a 1-person company, that is to say a private limited 1-person company. Provided that it shall also be the duty of a member of 1-person company to intimate the company the change, if any, in the name of the other person nominated by him, indicating the memorandum or otherwise within such time and such manner as be prescribed, and the company shall intimate the registrar any such changes within such time and in such manner as may be prescribed. Now, what does this mean? Now, you can start off a private limited company by 2 members. You can start off a public limited company with 7 members. And you can start off a 1-person company with 1 member. Simple. Now, whenever we make a 1-person company, the 1 person has to also nominate in the memorandum that other person who will take his place in case something happens to that 1 person who is the head or the member of the 1-person company. So this also means whether it's a private limited, whether it's a public limited, or whatever the company is, whatever changes that take place in the company, they need to intimate that to the registrar within such time and manner as may be prescribed, with the payment of a fees. In case that is not done, then a penalty has to be paid. Please take about 30 seconds and read the slide, and then we proceed. Okay. Now, they maintain the minimum number of members. Now, every company, like I told you in the previous slide, has to maintain 2 members in case of a private limited company, 7 members in case of a public limited company, and 1 member in case of a 1-person company. So that minimum number has to be maintained. Otherwise, there are effects and consequences as per the Companies Act. Okay. So now, if any time the number of members of a company is reduced, in case of a public limited company below 7, and in case of a private limited company below 2, and the company carries on business for more than 6 months while the number of members is so reduced, every person who is a member of a company during that time is to carry on business after the 6 months and is cognizant, aware of the fact that it is carrying on business with less than 7 members or 2 members as the case may be, shall be severally liable for the payment of the whole debts of the company contracted during that time and may be severally sued thereof. So what does this mean? Firstly, the number of members in case of a public limited company cannot reduce below 2, below 7. In case of a private limited company, it cannot reduce below 2. In case a company's number of members has reduced below 7 and 2 respectively, and the business of that company is carried on for 6 months, and the remaining members are aware of the fact that the numbers has fallen below 7 and 2 respectively, then whatever liabilities of the company that have occurred after the passing of 6 months from the time of number of members falling down, the members that were aware will be liable for the debts of the company and may be severally sued after that. Okay, so if the number of members falls below 2 and 7 respectively for a private limited and public limited company, then in that case, and 6 months business is carried on, and the remaining members of a private and public limited company are aware of this fact, and they allow the business to be continued after 6 months. After 6 months, whatever business is carried out or whatever debts are owed by the company shall be the company of those continuing members, and they can also be severally sued. Okay, please take about 30 seconds, go through the slide, and then we proceed. Okay, now we start about, remember this topic what we are discussing today is about incorporation of a company and the matters incidental thereof. So let's talk about what is incorporation of a company. The incorporation of a company, the Companies Act 2013 provides the procedure to be followed for incorporation of a company. So we are going to discuss that as per the Companies Act 2013, what is the procedure to be followed for incorporation of the company. First step for incorporation, reservation of name by filing e-application. Please remember, for a private limited company, public limited company, one person company, or any company registered under the Companies Act 2013, we need to first apply for the name. We need to see if the name is available. Now, what do you mean by this? Now, the name of your proposed company or the new company cannot be same or similar to any existing company. Like for example, we have Infosys, we have Wipro, we have TCS, we have Tata, and all these companies. You cannot start off a company again today with the name of Infosys Private Limited or Wipro Private Limited. No, because this name is similar to an existing company. So this will not be allowed. Your registrar itself will not allow you this name. Similarly, the name should not be something that is explicitly denied by the central government, or it has certain matters which make the viewer believe that that company is affiliated to the state government or the central government or anything like that. So those terms cannot be used. So basically, confusing terms cannot be used, misleading terms cannot be used in the case of a company name. So, and also it should not be identical. It should not, there should not be a trademark or whatever. All that needs to be checked. So before we start off with the incorporation, first an application for reservation of the name is given to the ROC, and a form is filled where 6 names in order of preference are given. First preference, second preference, third preference, fourth preference, whatever the person forming the company wants. And what is the logic behind that company name has to be given. The respective registrar at his office examines the form. They check whether the name is available or not, and then they approve a name. Now, in case all 6 names are not available, in that case, then they ask the person applying to give another fresh set of 6 names, and then they scrutinize those names. Are we clear? Then once the name is finalized, the ROC sends back saying this name is reserved, and I think it is reserved for a period of 30 days or 60 days. That means if within those 30 days or 60 days you do not complete the incorporation, then in that case the name will be opened up again. That means you will not have a first right on that name again. Second step, drafting and signing of MOA, AOA, and submission to ROC. ROC means Registrar of Companies. Now the second important step is the person who's promoting the company has to draft the Memorandum of Association and Articles of Association of the company, What do we mean by Memorandum of Association and Articles of Association? The Memorandum of Association is an important document of the company that spells out 5 major components: the name of the company, the registered office of the company, the subscribers of the company, the objects of the company, and also the share capital of the company. Now, what do you mean by the objects? Please remember, whatever the company is formed for, its main purpose, that purpose has to be mentioned in the Memorandum of Association as its main objects, and a company has to carry on those objects only. Let's say a company's main object is to deal, trade, and manufacture furniture. Suddenly, the company cannot start the business of computers, buying and selling computers, unless and until they amend the Memorandum of Association to include that objective in the Memorandum of Association. So, the objectives mentioned in the Memorandum of Association have to be carefully drafted to ensure that all the activities that the company intends to do are contained in them. Then you have the share capital clause. The share capital clause simply gives the amount of share, authorized capital, that the company is incorporated with. It may be authorized capital of 1 lakh divided into 10,000 shares of 10 each. It could be an authorized capital of 10 lakhs divided into 1 lakh equity shares of 10 each, or whatever the authorized capital the company wants or the promoters want, can be mentioned in the Memorandum of Association. They can start the company with that. So basically, the Memorandum of Association gives the relationship of what the company will have with the external world. Okay, that means how the company will deal with others, the banks, the government, the customers, and the objectives and this thing. Whereas now let's come to the Articles of Association. Articles of Association is also an important document of the company, which spells out the internal rules of the company and the internal procedures that the company is expected to follow. So Memorandum of Association gives basically the external relationship of the company, whereas an Articles of Association gives the internal structure and rules of the company. Rules such as how to transfer the shares, how to admit or retire a director, how to remove a director, how to appoint auditors, and other things. The internal structure of who will be the first directors of the company, in case what is the share transfer process, what is the share transmission process. So all these internal procedures will be mentioned in the Articles of Association. So like I told you, the Articles of Association gives the internal structure or the internal functioning of the company, whereas the Memorandum of Association gives the external functioning of the company. These documents are to be e-filed and e-stamped. Now, once these documents are prepared by the promoter of the company and he gets these documents checked by a professional or whatever, he can e-file these documents. That means e-file means submit them online to the Registrar of Companies for the purpose of incorporation of the company. Then the registrar will go through the MOA and AOA, see if any clauses are invalid, or if some clauses that are not allowed, he will send it back and say, please make these changes. Or basically the registrar will see if all the forms are okay. If the forms are okay, he will approve it. In case it is not, he will send it back and ask for changes to be made. Okay. Then consent of person nominated as directors to act as directors to be submitted electronically. Then there is also, along with the MOA and AOA, there is a form which needs to be signed and submitted by the directors of the company, giving their consent that yes, we agree to be the directors of the company and act as the directors of the company. So this form also has to be filled by both those directors. They have to give their consent electronically through a digital signature and submit that form. Submit of statutory declaration of compliances and other declaration. So for certain classes of companies, there is also a requirement of a statutory declaration of compliance, or in all these forms, there is a declaration at the bottom of the thing that all the compliances as per the Companies Act have been done, and this is normally done by a professional, and then the form is submitted to the ROC. Then once you submit the form, there is also the fees that needs to be paid and the amount of stamp duty electronically. That depends on each state to state as to what is the amount of stamp duty and what is the fees that needs to be paid. It depends on the MCA and the state. So once you submit those forms, all these fees and details are pre-populated automatically, and unless and until that fee is paid and the stamp duty is paid, the documents will not be taken up for processing by the ROC. Then once the ROC gets all the documents, okay, one more document which we didn't mention here is the document about the registered office of the company. So there is another form that needs to be filled up to fix the registered office of the company, along with the proof of that registered office of the company, any government proof and some declarations. Those have to be filled by the proposed directors and submitted to the ROC. Once the ROC gets these documents, he scrutinizes it. If he finds everything in order, then he processes it, and then he generates a certificate of incorporation, which is digitally signed by the ROC of whichever state the company is proposed to be incorporated. File declaration about registered of the office. Now this can be done either after the incorporation certificate or before that, but normally it is also filed with the MOA, AOA and the other documents like your nomination of directors and everything. All these about the address of the registered office is also filed at the same time. Once the ROC finds everything in order, then he issues a certificate of incorporation. In case he does not find things in order, he sends it back and asks for changes to be made. Please take about 30 seconds and read the slide. Okay, then once the documents are filed with the registrar, he checks all the documents, he scrutinizes all the documents for errors or any inconsistencies or anything. If everything is found in order, he issues a certificate of incorporation using his digital signature. Then once a certificate of incorporation is issued, there is also a document or also a number called as a corporate identification number, that is CIN, is issued, and that number is specific only to that particular company, and for all purposes, if that number is quoted on the MCA website, you will get most of the information or all of the information pertaining to that company. Then all the documents that have been submitted, have a copy of that has to be maintained by the directors and by the shareholders of the company, by the members of the company for future use. And as needless to say, if any information is false or incorrect or any information is suppressed at the time of incorporation, the people who have made those statements will be penalized, and also legal action can be initiated against them. And that's the declaration that they need to give, that all the information given below is true and nothing is false, and in case it is found to be false, they will be held liable. Company already incorporated by furnishing any false or incorrect information or representation, a post incorporation, the registrar, if any company has, if later on the registrar or the MC, anyone finds out that the company was already incorporated giving false information and misleading information, then the registrar of companies can take action against the people who made those statements, as well as cancel the incorporation of that company, and then refer the matter to the tribunal, and the tribunal's order will be final in case of incorporation of a company. I hope this is clear. Please take about 30 seconds, go through this, and then we proceed. Now let's come to incorporation of a one-person company. Now, law with respect to formation of a one-person company provides that the memorandum of OPC shall indicate the name of the other person nominee who shall, in the event of the subscriber's death or his incapacity to contract, become the member of the company. Such other nominee may be given the right to withdraw the consent. Now, whatever is the process we just saw for incorporation of a company, that will apply to a one-person company also. But in addition to those, the memorandum of an OPC will also have a nomination that in case to that one person who's a subscriber to an OPC, something happens to it, something happens to him, then in that case he will take his place. But the memorandum also contains a clause which gives the nominee to withdraw his consent at any point in time. So it could happen that when the company was incorporated, the nominee gave his consent that okay, I will, if something happens to the subscriber, I will act on his behalf. But later on he changes his mind. So that option is also given to the such other nominee, that he may withdraw his consent whenever he feels like. The member of OPC may at any time change the name of such other person nominee by giving notice to the company, and the company shall intimate the same to the registrar. Any such change in the name of the person shall not be deemed to be an alteration of the memorandum. Now, if we are giving an option to that nominee to withdraw his consent, please remember even the subscriber to the memorandum has a choice to change the name of that nominee later. Maybe at the time of incorporation of the company, he thought Mr. A should be the nominee, but after maybe 2 months or 3 months, he changes his mind. So that option should also be given to the subscriber to change the person nominated to take his place in something happen, and this information should be intimated to the registrar as soon as possible. A natural person shall not be a member of more than one OPC at any point of time, and such person shall not be a nominee of more than one OPC. A natural person is a person like you and me, who's a living being. He shall not be a member of more than one OPC. So a person can start just one OPC at one point in time, and he can also not be a nominee of more than one OPC. So he can be a member of only one OPC, and he can also be a nominee of only one OPC. All this is in addition to the previous things what we saw. All these things also apply to the OPC, but in addition to these clauses also apply to it. All right. Please take about 30 seconds, go through this, and then we will proceed. Okay, now let's come to another form of company. Now we have spoken about, so far we've spoken about the incorporation of a private limited, public limited, or a OPC. That is 1 member, 2 members, and 7 members respectively. Now let's come to another form of company as per the Companies Act, which is a company with charitable objects, etc. Those are called Section 8 companies. Okay, now please remember the incorporation procedure of them will be more or less the same what we saw in the previous slides, and whatever we are going to discuss now will be in addition to those. These are not going to replace those provisions, but these are going to be in addition of those requirements. All right, so object of formation of Section 8 company. Section 8 of the Companies Act 2013 deals with the formation of companies which are formed to promote the charitable objects of commerce, art, science, sports, education, research, social welfare, religion, charity, protection of environment. Such company intends to apply its profit in promoting its objectives and prohibiting the payment of dividend to its members. So like the first point says, such companies normally are incorporated with the whole objective to promote charitable objects of commerce, science, art, religion, education, research, social welfare, religion, charity, and other things. So their main objectives are dealing with not-for-profit activities, charitable activities. Charitable activities simply means donation and doing well for the society as a whole, and not making profits as such. And such companies, whatever money they get, if there is any money remaining after they meet their objectives, that money cannot be paid out as dividend to any of its members. Now let's come back to this point as a private limited, public limited, and OPC. In a private limited, public limited, and an OPC, whenever a company makes profits, either it can retain that profits to be used in the future, or it can distribute that profit to its shareholders in the form of dividend. Okay, but a Section 8 company cannot do that. A Section 8 company, if it makes any excess, I will not say profits, but if it makes any excess of income over expenditures, that money, it has to maintain it to be used for the objectives, and it cannot pay that money to its members as dividend. All right, now when a Section 8 company is formed, along with whatever incorporation formalities we saw, it also needs to give a declaration that whatever money it gets, it will use it for the objectives of charity and not for profit, and it will not distribute any dividend to its members. That declaration and consent has to be given in the beginning itself. Then the power of the central government to issue license. Now obviously for a Section 8 company, along with the ROC, also the approval of the central government is required, and central government is the body where the declaration or whatever has to be given by the company, saying that it will only carry out charitable purpose and not any other purpose, and it will not distribute dividend. After that, the central government gives its approval. The section allows the central government to register such person or association of persons as a company with limited liability without the addition of the words limited or private limited to its name, by issuing a license of such condition as it deems fit. So once the incorporation of Section 8 company starts off, they give all the declarations, they give the MOA, they give the AOA, they give the director's consent, they give the registered office of the company, they give all that information, and then give it to the ROC, and then the ROC and the central government scrutinize it, they give their consent, and once the consent is given, the central government also removes the need for using the word limited or private limited after their name. So it could just be ABC, or it can be ABC Enterprises. There's no need to use the word limited or private limited after its name. Okay, so the central government issues a certificate or something without the name. Now we talk about privileges. The Section 8 company contains or gets all the privileges of a private limited, public limited, or OPC. That is your separate legal identity, perpetual succession, and limited liability. So it is the same. A Section 8 company gets these privileges. Then a firm may be a member of the company registered under Section 8. Now, it's not necessary that only a living person needs to be a member of a Section 8 company. Even a firm may become a member of a Section 8 company. Now, a company registered under this Act shall not alter the provisions of its memorandum or articles except with the previous approval of the central government. Now, like every company, private limited or public limited, even a Section 8 company will have its memorandum and articles of association, and any alteration in the memorandum or articles of association will not take place without the approval of the central government. They require the central government approval. Then, if the central government finds out that whatever conditions subject to which the license was given to that company to work as a Section 8 company, if the company is not carrying on its objectives based on that, it may revoke or cancel its license and take penal action against the company. The central government may by order revoke the license of the company where the company contravenes any of the requirements or the conditions of this section, subject to which a license is issued, or where the affairs of the company are conducted fraudulently, or violation of the objectives of the company are prejudicial to the interest of the company. So like I said, if the central government finds out that any activities are being done fraudulently or against public policy, in that case, it can revoke the license, or if the company is violating any of the conditions subject to which the license was issued to it, in that case, it can cancel or revoke the license. I request you to take about 30 seconds, go through this, and then we proceed. Please go through this, then go through this as well. Okay, now your company, whether it's a private limited, public limited, OPC, or a Section 8 company, it has been incorporated. So what are the effects of this incorporation? The effects of the incorporation are on the subscribers to the memorandum and all other persons who may from time to time become members of the company shall be a body corporate by the name contained in the memorandum. All right, so whoever has mentioned their name in the memorandum of the association shall become the subscribers of the thing, and the company shall become a body corporate. Such a registered company shall be capable of exercising all the functions of an incorporated company under this Act, and having perpetual succession with power to acquire, hold, and dispose property, both movable and immovable, tangible and intangible, to contract and to sue and to be sued. So a company will be able to do all these activities. That is, once it is incorporated, it will be able to have perpetual succession with the powers to acquire, hold, dispose property, both movable and immovable, tangible and intangible, to contract and to be sued and sue by its name. I request you to just go through this, and I will be back in 2 minutes. Just have some water and come back. देखा मैंने, फिर ऐसा नहीं हो कि नीचे चला जाए। नीचे आएगा ना, 6 बजे न्यूज आएगा ना कुछ। Okay. All right. So now we've seen what happens in case, what is the effect of registration of the company. Now, what is the Memorandum of Association of the company? Like we discussed, it's one of the most important documents of the company. It is the base document for the formation of a company, and along with the articles of association is regarded as the constitution of the company. All right. So like I told you in the beginning, Memorandum of Association is one of the most important documents of the company, and it is also known, along with the articles of association, it is known as the constitution of the company. Now, the objects of registering a Memorandum of Association. It contains the object for which a company is formed and therefore identifies the possible scope of its operations beyond its actions and cannot go. So first and foremost, it contains all the objectives of the company, the main objectives of the company, why a company is being incorporated, and also sets the boundaries beyond which the company cannot go, and it has to conduct those operations and those activities. Okay, so it sets the boundaries for the company. It enables shareholders, creditors, and all those who deal with the company to know what its powers are and what the activities it can engage in. Also, please, anyone, any customers or any vendors dealing with the company can actually read the Memorandum of Association of a company and know what are the powers it has and what are the actions it can do. If a company acts beyond the powers given to it by Memorandum of Associations, it is called as something called as ultra vires. Ultra vires means beyond the powers, and if the company acts beyond the powers given to it by the Memorandum of Association, then those activities are invalid and void. A memorandum is a public document under Section 399 of the Companies Act 2013. Consequently, every person entering into a contract with the company is presumed to have knowledge of the conditions contained therein. Now, like this definition goes, Memorandum of Association is a public document. That means any person can ask the company for its memorandum and articles of association, and the company cannot refuse. The company needs to adhere to that and give the memorandum and articles of association to the company. So any person dealing with the company tomorrow cannot use the excuse saying that I didn't know about the objectives of the company, I didn't know about the powers of the company, simply because it is a public document and you could have taken it and read it whenever you had the time or whenever you think it was necessary. You did not have to wait for so long. Okay. Then the stakeholders must know the purposes for which this money is used by the company and what risk he is taking in making the investment. The shareholders of the company are people who invest money into the company. So they should know the purpose for which they need their money is being used and what are the activities that the company intends to do and where their money is going. So this is one of the objects of the Memorandum of Association. I request you to take 30 seconds and go through it. Now, what are the contents of the Memorandum of Association? Let's have a look. The first clause it contains is the name. The Memorandum of Association contains the name of the company, that is ABC Private Limited, ABC Limited, or ABC Private Limited OPC. So whatever is the name of the company is contained in the memorandum. That will be the first one. And the second one is in relation to the registered office clause. The Memorandum of Association also contains the registered office of the company, that is where the registered office or which state the registered office of the company is situated in. That is also contained in the Memorandum of Association. So like for example, if the company is incorporated in Delhi, it will say the registered office of the company is in the state of Delhi. If it is Mumbai, it will say the registered office of the company is in Maharashtra, Mumbai. Or similarly, if it is in Bangalore, it will say Bangalore, Karnataka. All right. Then in terms of the object clause, like I said, the Memorandum of Association gives out in detail all the various objectives of the company. That is what the company is formed for, what is its main purpose, what business it intends to carry, what about the banking transactions, what about the export import if it plans to do. All those activities will be contained in the Memorandum of Association in the object clause. Then we have the liability clause. Like I said, there is limited liability in case of a company. So the liability clause of the company will say, in case it is a company limited by shares, it will say that the liability of the shareholders is limited to the amount of share capital unpaid by them. In case it is a company limited by guarantee, then the clause will say that the liability of the subscribers or the shareholders is limited to the extent guaranteed by them in the memorandum. And in case it is an unlimited company, which is not likely these days, it will say that the liability of the shareholders is unlimited. This is the liability clause. Then it contains the capital clause. Like I said earlier, the capital clause will contain the details about the authorized share capital of the company. If the authorized share capital of the company is say 1 lakh divided by 10,000 equity shares into 10 rupees each, it will say that the authorized share capital of the company is 1 lakh divided into 10,000 shares of rupees 10 each. And lastly, it will contain the subscription clause, which is an important clause, which says that the subscribers to the memorandum agree to subscribe their name to the memorandum and be recognized thereabout as subscribers to the Memorandum of Association and agree to take up the shares that are given against their name. So these 5 or 6 clauses will be most important and will be contained in the Memorandum of Association. Okay. Now, let's look at this table. The Companies Act 2013 gives you various model Memorandum of Associations like Table A to Table, Table A, B, C, D, E, F, G, H, I, up to Table I. It gives you the model Memorandum of Associations that are there. Okay, like for example, Table A will give you the model Memorandum of Association of a company limited by guarantee and not having a share capital. Table B will give you the Memorandum of Association of a company limited by guarantee and having a share capital. Table C will give you Memorandum of Association of an unlimited company and not having share capital. Table D will give you Memorandum of Association of an unlimited company and having share capital. Table E will give you Articles of Association of a company limited by shares. Table F will give you the Articles of Association of a company limited by guarantee and having a share capital. Table G will give you Articles of Memorandum of Association of, the Table F onwards, it is Table E onwards, it is Articles of Association. The memorandum is only A, B, C, D. Or I think there is a mistake here. Table F will give you a Memorandum of Association of a company limited by guarantee and having a share capital. Table G will give you the Memorandum of Association of a company limited by guarantee and not having a share capital. Similarly, Table H and Table I will be giving you Memorandum of Association, Model Memorandum of Association of Companies. Now, what do you mean by Model Memorandum of Association of Companies? It simply means when a person makes a company, he has to write the Memorandum of Association from scratch. So to avoid doing that, they have model clauses in the Memorandum of Association contained in Table A to I. So this can be used by the person promoting the company while making his Memorandum of Association. All right. So then, before we get into Articles of Association, let's have a quick recap of what we've done so far. Today we spoke about what is a company, what do you mean by incorporation of a company, once the company is incorporated, what happens or what are its rules and regulations and the things like that. Then we spoke about what is the procedure for incorporation of a company, and on incorporation we get a certificate of incorporation, corporate identity number. Then there is a one-person company, an OPC. One-person company shall indicate the name of the other person. Okay, and then we have the Section 8 company. We've also discussed what a Section 8 company is, formation and what are the effects, then effects of registration, and then we discussed what is the Memorandum of Association. So before we proceed further, I would like to again reiterate the Plus program of Unacademy, wherein there is a subscription plan of Unacademy which we encourage viewers to subscribe to. I am part of the CA Foundation and Intermediate course, and in this course the subscription packages are for 1 month, 3 months, 6 months, 12 months and 24 months. The rates of the package are given on your screen. I request you to go through them in detail. The 1 month package costs 3,500, the 3 month package costs 8,750, the 6 month package costs 14,000, the 12 months package costs 17,500, the 24 months package costs 21,000. All right, so you can make a choice of the package you want according to your needs, but I will personally recommend to you the 12 months and the 24 months for 2 reasons. One is the cost effectiveness, and next thing is, for any professional examination you require that kind of time. So in a cost effective manner, if you're getting that many months of validity, I think it makes sense. And while you're making your subscription, please do not forget to use the code Prathik, Prathik, to get a discount of 10% on the subscription price. I repeat, Prathik, Prathik, to get a discount of 10% on the subscription price. And also, for those of you who have not downloaded the Unacademy Learning App yet, I request you to download the Unacademy Learning App from the Play Store. Enter in your details and enter your mobile number. You get an OTP. Use the OTP and register yourself on the Unacademy app. What does the Unacademy app do to you? The Unacademy app opens the world, or gateway to the world of courses, resources and contents that Unacademy has to provide to you, and all this at your fingertips. And even while you're on the move, you can refer to these and make use of it whenever you want, in between classes, or in between errands, or in between work when you're running. If you get whatever time when you're commuting, you can use this app and make use of it. So for the people who are already on the app, thank you for your support, and I look forward for support in the future as well. And for those who haven't downloaded it yet, I request you to download it and make use of it as soon as possible. And also, I have taken various other sessions on YouTube, which you can go to the YouTube app and refer those sessions. I've taken also a lot of sessions on Indian Partnership Act, the Companies Act, Part 1 to 6. Then I have taken sessions on Limited Liability Partnership Act, the Indian Contract Act, and other things. So you can go to the archives of Unacademy and this thing and find them there. And I hope you find them useful. And for the people who have not yet followed my profile, I request you to go to the Unacademy app, look for my profile, and click on the follow button to get live updates about my sessions, the timings and the topics for the same. And for the Plus program, what do you get when you subscribe to the Plus program? You get daily live classes where you get to chat with your educator, engage in discussions, ask your doubt and answer polls, all while the class is going on. Yes, while going on, you can ask them questions, clear your doubts, discuss topics with them. All this when the classes are going on. You do not need to have a separate session or a appointment fixing session. You can do it when the classes are going on. The courses are structured. All the courses are structured in line with the exam syllabus to help you best prepare for it, so that there is no stone unturned towards your preparation for your ultimate goal, and maximum effort is put in to ensure that. The Plus program also conducts various live tests and quizzes to evaluate your preparation with the regular mock tests and quizzes and get detailed analysis of your performance. So this helps you in evaluation of where you stand, what are your strong points, what are your not so strong points, so that you can work on them accordingly. And then most importantly, it gives you unlimited access to the world of Unacademy, where that is one subscription gets you access to all the live and recorded sessions to watch from the comfort of your devices, and that too at the timing convenient to you. You can select the topic, you can select the educator, and you can also select the time that is convenient to you and make most use of it. So I request you to make the most of it and get on to the Unacademy Plus program as soon as possible and make the most of it, and also download the Unacademy Learning App on your mobile and learn and grow on the move. So thank you very much. This is your educator Prathik Gupta signing off, and I hope you found the session useful. Please do comment and give me your feedback. Thank you so much, and I will see you again soon.